third video in as many days. I'm being lazy here because market activity recently just leaves me really exhausted at day's end. I mean, truly just wiped out. And these videos are easier to make than the essays and pictures I usually put together. So I'm being a bum. So anyway, here we go. The past 15 trading days have held about a year's worth of market action. It's just been amazing. Up here, let's change this to the NQ. It tells my story a little better. It's going to look almost the same, but so here, back on July 26, the market looked threatening to burst to the upside. As I said very clearly then, the NASDAQ, I felt, was doing a false breakout as it had before, and it was definitely a false breakout. Now, so we fell and faster and faster and faster and faster. And we bottomed on, I guess, Monday evening. We got down, this is beneath 2,000 on the NQ. And before the market opened on Tuesday, we started rallying. Let's zoom in a bit. So we rallied and established a nice set of higher highs and higher lows. In retrospect, let's back this up to 120 days. It's pretty evident that this line here at 2175, which was really the range for a terribly long time, it extends far beyond this, was a very meaningful resistance, and it didn't get above that. In fact, that would have been a heck of a good place to short, and it backed away from there. And it backed away and then rallied and then backed away some more. So these are huge, huge rips happening in the market right now. Anyone trying to trade this intraday is probably getting ground into hamburger. There's a few lucky chaps out there who either through skill or dumb luck, probably more luck than they'd like to admit, have been handling this pretty well. But this is just it's a whipsaw fest. This is, I mean, just the past couple of days on this is what, 160 point range? I mean, that used to be like what a quarter would give you. So nasty, nasty stuff. I have, for myself, decided to not hold any large overnight positions until we reach what I think is the maximum of this counter trend rally. Okay, sorry I got interrupted there. It's kind of funny because you probably saw the quote instantly change a lot. I'm doing this at 3:16 PST now, so there's a little more droppage happening. I kind of lost my place where I was. Bottom line for me is I don't trust this market. No big positions overnight. Just I'm not going to do it. Shut up, dog. Anyway, where was I? Ah, yes. So before I return to the markets, I just wanted to explain my end of stupid title that I said earlier. This is just 3 examples because I hate when things are dumb. I hate when things are stupid and retarded because I'm a sensible chap. I'm a logical fellow. I like the world to make sense. And when things go full tard, it really bothers me because I always wonder what's wrong with me. And in the Silicon Valley, where I live, it's amped up 100 times worse. So I had 3 samples here. I've mentioned all these before. But just to kind of encapsulate, in the spring, things seem so frickin' stupid. And I think that's all over now. I think the stupidity, for now, is behind us till the next bubble comes along. So like one of them was this one, where Google shelled out $150 million to 2 guys just to keep them from going to Twitter. Another one was the $41 in funding that Color.com, probably Earth's stupidest product, received. That actually failed really quickly. I think within 30 days, like one of their founders left, and it got all these like 1-star reviews. So I imagine. Well, I don't know what they're going to do. I think that it's pretty universally agreed that it's been a flop. I haven't read any good press about that or seen any good press. I think it's been just kaput. And then finally, another stupid thing was Sequoia, which is like this isn't some weird little venture capital nobody. This is like the creme de la creme of venture capital firms. They haven't said, but there's speculation, $10 million into a grilled cheese franchise, just because the guy who founded it was the Flip creator. So they assume, it's like in Fiddler on the Roof. When you're rich, they think you really know. By the way, the $41 million that also Sequoia gave to Color was done without so much as a PowerPoint presentation. I guess he just kind of just gesticulated his arms about and told them it would be really swell. And so we got a check for $41 million to fund this thing. So anyway, stupid. And I think that it's all finally behind us. Thank you, Jesus. Because I hate stupid. I like sensible. And this is a pretty sensible looking chart. And we were just looking at the intraday of this earlier. But as I had mentioned, they had this big range that's lasted for, a good 9 months now. Higher highs in each case, but a failure after each one. And I suppose it could have been plausibly suggested that as we approached this level here, we were going to get another stabilization and bounce. Didn't happen. The move down it's made is pretty darn close to a measured move that would be revealed after this kind of range. So for now, I just don't think there's tremendous more amounts of downside. I say that with a bit of a tear in my eye because I covered a lot of shorts over the past days and definitely missed a chunk of profits from those. Yesterday, I felt pretty good about covering those shorts because the Dow was up, 430 or something? I've lost track. Today, I feel not as good about it because things are still falling more. As far as where things stand now, and I will quickly rip through these. And I work awfully hard to find these symbols, so I'm not going to so much talk about the symbols. I'm just going to kind of show you the graphs swiftly just to give you a sense. I am in 21 shorts right now, all of them small. I have no big positions, either long or short. If the market keeps falling and falling and falling, I guess that's okay. I paradoxically will be really disappointed because I've waited a long time for this bear market to come back, and to miss it would be kind of ironic, don't you think? So I'm still expecting / hoping for a pullback. And let me just, before I get back to the stocks here, as I had said before in yesterday's video, pulling back to around anywhere from 1250 to 1300 would be glorious. I guess the kind of thing that would make that happen would be Bernanke. I don't know what in the devil could cause the market to rally 15%. But I suppose if he came out and said they're going to do a $2 trillion QE3, I guess that would so wipe out the dollar that on a nominal basis, stocks would rally. I don't care what he does, honestly, whether it's pulling unicorn dust out of his ears. I need to see that kind of rally before I get serious about shorting. But I do still have some shorts. These are charts that, to me, still offer not too much upside risk, but plenty of downside risk. There are many stocks. I've got now 286, God help me, stocks that I would love to short at the right prices, but I just can't do it now. There's no way I'm going to short them and look at a 25% pop in those things if QE3 is announced. This is one chart you may be familiar with, GDX, the miners, kind of a perpetual favorite of mine. My good Parisian friend Serge just did a post about how GDX will follow suit to the S&P. I'm inclined to agree. This is being held up by the strength in gold principally right now. But I still contend that this could be one of the best shorts going. And this is one of the few shorts left that I think is reasonably safe. Again, just thumbing through my very small number of shorts that I've got. I'm sorry to deny you the symbols. My clients pay me to trade for them, and I just, sometimes I want to talk about symbols, sometimes I don't. The point I'm trying to make here is that there are still some stocks that I think offer bears opportunity for profit. This one I'll reveal. This is SLW. Kind of got burned on this a bit today. Silver had a strong day, but I still like the pattern here. I still like that topping pattern. Thumbing through, we're almost done. A couple of more. There we go, and so forth. So let me wrap this up. Now, on any given morning, we could wake up to some big news. We've gone down so much at this point, the big news I imagine would have to be to the upside. That's what I'm waiting for. I will, until such time comes, which may never come, have to judge stocks on a stock-by-stock basis. I am extremely uncomfortable with a market that goes up or down 500 points a day, which is what we're seeing now. This feels like just like September and October 2008 when you had these kind of gyrations. I got lucky yesterday with my longs, made good money, lost a big chunk of that today because I wasn't so lucky. I don't want to trade based on luck. I'd rather trade strictly based on charts. So I'm not just going to guess which, is it up or down 500 tomorrow? What's going to happen next? If we get, and I'm sorry to be repetitive here, but this is so important, if we get back to the mid-1200s to 1300, I will have no compunction, QE3 or not. In fact, it would be a huge relief to have QE3 announced because we get that one last variable out of the way. I will have no compunction about going 200% short, using all my margin power, just really pushing the pedal all the way down. That would be the ideal opportunity for bears because the market has already tipped its hand. We already know the direction it's going. It is my firm belief that the bull market has no chance, zero, of resuming. I believe the highs are in for years to come unless we have a Weimar Republic type hyperinflation in which, the Dow's at 15,000, but it's because bread is $300 a loaf. Yeah, I could see that happening. In nominal terms. But barring hyperinflation, I believe that the bull market is clearly broken, and we need to trade on the short side almost exclusively now. And if we do push our way back 150, 200 more ES points, I'm happy to do so on an intraday basis. And that's it. So, I be tired. So I'm going to be resting tonight and sleeping relatively easy because I'm 80% in cash. If the market collapses, boo-hoo for me because I'm only going to partially partake. But again, this is not for me about gambling. It's about being rational, which sometimes works and sometimes doesn't. All right, I'm going to sign off here. I don't have any cute sign off, and I won't even ask you to click ads. See, I didn't even mention clicking ads, so you don't have to click ads. You can click ads if you want, but you don't have to click ads. So I didn't say anything. Great. Cool. All right. Thanks, everybody. Hang in there. This is exciting, and we've all waited a long time for this. So let's rock and roll.